Welcome back to another episode of Lucid Daily, the number one spot for Lucid news and information. Today we have a pretty cool episode ahead of us, so let's go ahead and get started. First off, Lucid was up 7.46%, absolutely killed it today. We'll go over exactly why Lucid did so well. They were down 0.08% in the after hours, so relatively flat. You did have Tesla also rally 4.78% today. You had Rivian up 12.38%. This stock really seems to swing. I mean, if Lucid has a good day, Rivian swings up a ton. If Lucid has a bad day, Rivian swings down a ton. It's just whatever the EV market does, Rivian seems to do twofold of whatever the total EV market does. Next, you have GGPI. They were up 1.12%. So hopefully we can get news on a merger soon. And relatively speaking, this is super general, but the Federal Reserve kind of did calm fears. There's a little bit less uncertainty about the Federal Reserve what the Federal Reserve is going to do. There was a lot of anticipation for this meeting. We kind of all knew what to expect, but we just wanted to double check and make sure that the Federal Reserve and Jerome Powell was going to do everything that we thought that they were going to do. And as you can see from the Wall Street Journal headline here, the Federal Reserve embarks on a rate increase to combat inflation. Official signal quarter point hike for the first raise since 2018. This will be followed by 6 more this year. And obviously the market responded well to that because the VOO, the Vanguard 500 Index Fund ETF, was up 2.2% today. Thus, we saw a lot of stocks go to have a positive upside today. And that's why I saw Tesla rally the way it did. Now, the next thing I want to talk about is Meet Kevin actually did a Lucid analysis today. Now, this is a company that he's been pretty open about. He's been pretty fair on the review of the actual car, and I feel like he's been pretty fair on the valuation as well. So in this video, I want to go ahead and talk to you guys about exactly my reaction to his analysis on the stock. The first part of the video, he goes over his father-in-law's review of the Lucid as he talks about in the video. And so we're not gonna watch that. You guys can go watch that on your own time. I highly encourage you to do so. It's a very good review. He speaks very highly of the car. And then he does a deep dive into the numbers behind Lucid, which is what I really love. So I want to go ahead and go over that with you guys and kind of add my insight into it and add my opinion and add some corrections where necessary. So let's go ahead and dive into that. So, all right. It starts off right here, and then we'll go for a couple of minutes. I'll stop it where necessary, and we'll talk where we need to talk. And let's go ahead and get started.
Now, I have not modified this spreadsheet at all. You can fact check me by going to my last Lucid video. This is what I wrote, many months ago when I did this spreadsheet, and I suggested the following: that there was a downside miss risk of the goal of trying to get to 1,000 deliveries in 2021, which we.
So we know that the actual goal for deliveries at 2021 wasn't 1,000, it was actually 520. He corrects himself in just a second by saying 560, but as far as I know, the actual goal was 520, and he does talk about that. So that was just a correction I wanted to add.
No, their goal ultimately was 560. They ended up delivering somewhere around in the mid 100s by the end of the year. They ended up getting to my model, number 214, by roughly January 20th. So obviously very, very delayed here. This is going to substantially delay the forecast here. But I'm just going to leave this like this for a moment. Because imagine if we could get 150,000 Lucids out by 2025. That's only in 4 years at 80,000 in revenue per vehicle. This spreadsheet we have looked at before, but I want to show something remarkable here. When we completed this spreadsheet, we projected that with a 20% margin, that is 20% profit on these 80,000 vehicles, $80,000 vehicles, and a 100 times PE ratio in 2025, we would still be sitting at just about 22 cents of earnings per share, with, unfortunately, a more reasonable price by the end of 2025, around $21.53. That's not ideal, right? Because that's kind of where the darn thing is trading at now. And so at the time we had recorded this video, we recognized this had a potential downside of 9.26% for 5 years. Every single year to get down to that 21. Now we're at 21, okay? So now let's go ahead and revise this spreadsheet ourselves. Let's try to be realistic here, okay? And I'm not trying to sound like a bear. Let's just be realistic with it. All right, so this was whatever, 150. Doesn't really matter. 2021 doesn't matter. I think we're gonna have a lot more of a Neo-style launch, which Neo-style launch is gonna be going more like, hey, it's gonna be a milestone when we get to 1,000 vehicles. So if we can honestly get to 8,000 vehicles in 2022, and then maybe 20,000 vehicles in 23.
So obviously this is a minor opinion. 8,000 vehicles in 2022 will absolutely destroy this company, like the stock price, because they already revised down from 20,000 to 12 to 14,000. If they hit half of what they revised down to, that'll be really ugly. So let's go ahead and let him plug these numbers in. But 8,000 for 2022 would substantially push the stock down, in my opinion. But let's just go ahead and keep watching. Let's see what he says.
Maybe we get to the full production of 2024 figures. Then we're going to need another factory, so massive CapEx expenses, right? And that's going to have to ramp, and it's not going to ramp very quickly. I think we're probably more in the neighborhood, if I'm being, a base case scenario here, maybe 50, 60,000 vehicles by 2025. Let's go with 60, okay? Just see what the valuation looks like then. We go to 60,000 vehicles in 2025. That's 4 years out. So we're going to type in here 4 years out. Now we're at 60,000 vehicles. Let's assume that they have not gone to their more mainstream vehicles yet, and they're still selling the premium vehicles in the range of $110,000.
So I think he may be even being a little generous here on the $110,000, because PeterRawlinson on the earnings call says that they do want to start producing the Pure by the end of the year. So that will substantially cut into the revenue per vehicle. He could be totally right. And it kind of just depends on how the rest of the year goes. Hopefully we get more insight into this as the earnings calls continue to come in, and we get hopefully a lot more ease when it comes to the supply constraints. Let's continue to listen. I think he's being relatively bullish on the revenue per vehicle. But let's keep going.
So we're going to bump this revenue per vehicle, right? Because we're scaling back how quickly we think they can actually scale their production. So we should increase the average price per vehicle, given that right now they're selling them for about $169. I'd say if we got to about 60,000 vehicles in 2025, 110K is probably closer to where we would be. I don't think we're going to get all the way down to that 80,000 per vehicle yet until we get into the hundreds of thousands of vehicles per year. Obviously, we're going to leave, just zeros in here for other things like energy, insurance, semis, robotaxi, really, because this is all more like Tesla related, right? We're trying to compare this obviously to Tesla, which makes sense. We're going to use a 20% margin here. Now, we might be able to bump this. So let's bump it. Let's go ahead and go to where maybe Neo sits right now, which is going to be closer to about a 23% cost. So let's go to 77%. Let's do that. And that's going to be the big number right here. So 77% will be the expense. That brings 23% of gross profit down. Operating expenses, probably 15%. Realistic. I think very realistic here. And then after their tax rate, they might have some credits here. Their effective tax rate's probably going to be lower. It's going to be more like 14 or 15%, especially in the industry they're in. But we're still only going to be sitting at about an EPS of around 16 cents a share. Let's just get rid of this for a moment here. And that's going to put us, I suppose we could leave it, it doesn't matter. Yeah, so we take this 16 cents per share, which I suppose if I double click this, if I expand this, I think it's a little bit more. Yeah, there it is. It's 15.96. Okay, so about 16 cents a share. And with a future PE of about 100, it brings us to a fair value of only about $16, right? However, we could probably bump the PE here. But now we're getting a little excessive to try to justify where we are today. I think this is excessive. So unfortunately, I do think that there's still risk here, right? There's definitely risk in Lucid. Now it is a risk asset at 2362, which is about where it is now. It is a risk asset. So if we do end up hitting some form of a bottom here after this March 16th meeting, it wouldn't surprise me to see a little bit of a movement to the upside. I could see it selling for around that 30 range, but I do think that 2930 is going to be a solid resistance for this company until we really start proving ourselves a little bit more. That doesn't necessarily mean this valuation is off. It just means it's going to be selling with a substantially higher multiple, right? But you can see here, there's a lot of pressure on this company's valuation where it is now until it can really prove that it can ramp. And right now, we're really not proving that. The other issues that we have, and I think this is probably your biggest issue here, is when we took delivery in January of this vehicle, we were told, hey, cruise control within 30 days. Okay, still no cruise control, right? So here we have a $169,000 car with no cruise control. We have LiDAR and we have all these cameras. But where is our potential autonomous driving? Even if it's mapped, right? Even if it's Chevy Cruise style or NVIDIA style or maybe an Apple partnership, where is that partnership? Where are details on that? And for us to really justify Tesla-style valuations, we have to do two things. One, we have to prove to the consumer that our software suite is killer. We don't have that because Lucid doesn't have that partner and they're not building it out in-house. And number two, we have to prove that we can scale production, which is the hardest thing to do in manufacturing vehicles. So as much as I love the vehicle, and I'm so happy that they're really taking great care of my father-in-law, they answer every single question he has. They've got some great people. There's a person who works at Lucid. Shout out to her, Winter. You're freaking amazing. You have made my father-in-law such a happy customer. So important. Valuation-wise, though, you've got an uphill battle. Let's just put it that way. There's really no sense in playing with this because the earnings are going to be so nominal for so long that this is one of those stocks where diamond hands are needed to be in it because you're going to be on a ride. Again, I do think there could be an upside movement here in the short term. I think we'll still get rejected at 30. I don't think we're going to see some of these momentum highs like we saw at Rivian or Lucid at any point in the near future here. So I certainly wouldn't be buying call options on this. If I had shares, I'd probably be selling calls on little rally days. So if, for example, if we rallied up to 28, I'd be selling calls against my position. But it's going to be a bit. It's going to be a minute for this to really get moving. So my thoughts, hopefully that's helpful for you.
All right, so with that, I want to share some of my personal thoughts. One of the things that I want to talk about is when he says that Lucid has an uphill battle, I do tend to agree on that just because they have to start meeting their goals when it comes to manufacturing. Not only just their high scale production that they want to have in the future, but their short-term goals of hitting that 12 to 14,000. I think that's something that could change in his spreadsheet is if they actually do hit that could help the valuation. But like he said, they're trading for about what they're valued in for 5 years, which is a little worrisome as an investor. Now, I obviously can't say that valuation should be taken as financial advice or anything like that because that is an extremely in my opinion, I do have a similar valuation when it comes down to my spreadsheet as well. My spreadsheet, it's not too far off. I wanted to use his just because his is a little more well put together. But my spreadsheet wasn't too far off of his. His was a little tight, a little bit. His valuation was a little more compressed than mine was, which is totally fine. I haven't done a ton of work on this since their last earnings call, which is something that I will be doing. But more than anything, what I think is important is he did talk about the potential for a rally, and I do think I could see a potential small rally when it comes to the market with the more certainty that we have with the Federal Reserve. Obviously, there is still a lot of uncertainty with what's happening with COVID in China, as well as what's going on in Ukraine and Russia. And if there's anything that leaks outside of that, we could have a lot more uncertainty. But the Federal Reserve kind of gave us their game plan. It's like, all right, we're good to go. Let's roll with this. So Lucid really has to start filling the valuation that they've put themselves into. Now, that whether that was earned or not, it kind of depends. The investors kind of built that valuation. So in that small rally, maybe if you have some higher shares, it may not be a bad idea. I may consider selling some of my higher shares that I bought, selling those and buying back in when it hits the lower 20s. But I haven't made any decisions, and there's no guarantee if that rally will happen. But right now, I have my shares holding. Now, the next thing that you can do, in my opinion, in my perspective, is he did say if you're in the stock, you're going to need diamond hands. If you are betting that Lucid will eventually have a valuation of Tesla's or of a large mega cap company, then now, if you're 100% convinced, have 100% conviction in this, and this is not financial advice in any way, it's just my opinion, it's just kind of a thought I had. Now is the time to accumulate a lot of shares for not 5 years, but for 8 to 10 years out. That's when you could see a large swing in this growth, kind of like a 2020 style for Tesla, how they really just catapulted up between 2019 and 2021. I think that could be 8 to 7 to 9 years out. Obviously, that's a super ballpark valuation, but within this 5 years, they have to start filling that $40 billion valuation that they currently have. So again, I have a lot of love for Lucid, and I'm actually pretty happy with Kevin's analysis. One, because he's super fair to the actual product. He mentions how much he loves the product, how well their customer support is taking care of his father-in-law, and he in his Lucid review said that this piece of hardware is a work of art, something that does not concern me, but something that I am looking for is a continuous upgrade in their software, looking for that software partnership. I do, from the last I read, PeterRawlinson said they are developing their software in-house still, but I would like to continue to see higher innovation, and that will help their valuation the better their software can get. So those are just a couple of the things I'm looking at. Again, I think this 5-year value, these like 5 years, if you believe in the company in the next 7 and 10 years, then this could be a time just to start getting a boatload of shares. Obviously not any financial advice. I can't stress that enough, especially something like you never know what could happen in 7 to 10 years. But if you are trying, like if you're underwater on some shares and we do see a small rally, it may not be a bad idea to break even, take a little bit of a loss, or get a little bit of a head on some of those trades. I don't know what I'm doing yet. I will keep you guys updated once we do get to those higher 20s and those lower 30 numbers. I think my average cost per share right now is 31, so it's a little higher. So I'm a little bit under of our current stock price right now. So that's my opinion. I rambled a little bit, but just be careful out there. I do really like Lucid. I think their product will prove the test of time, and I think it will continue to get better. We just need to get through supply constraints. Q2 I expect to still have choppy waters, but Q3 and Q4 we should start to have a little bit more of the wind at our back, and we should slowly start that ramp up in terms of cars, and hopefully we can get the Pures and more reservations coming in, and we can get those factories rolling along. So I hope you guys enjoyed this video. Let me know if you like this, and most of all, I do want to ask you guys this question. Do you think that Kevin's valuation of Lucid within this 5 years is fair? Do you think it's high? Do you think it's low? Do you think it's base? What do you think? Let me know your thoughts. I do really value you guys' opinion. So let me know down in the comments, and let's chat down there. I hope you guys enjoyed this video. If you got any sort of value from it, consider subscribing. And like always, we'll see you next time. Thanks for watching.